Yes, we all know this year, 2022, the market has sold off. Okay, they're making lower lows and lower highs. All right, in comparison to the last few years, last 2 years, say for instance, 21, 2020. Okay, so what has happened? The market's been making lower lows and lower highs this year alone. And the thing about it is, it's not been as easy of a market to trade as it was the last 2 years. Most traders over the last 2 years, in 2020, 2021, have been able to ride the market in a sense, okay? Regardless of what market you really traded, but we're talking about future markets here because I trade the future markets, and if you're tapping in or listening to this video today, then you're probably a futures trader. So, but it really doesn't matter, if you trade stocks or Forex or options or whatever the case is. But we're going to sit there and focus on futures, okay? Because you're probably wanting to get into futures trading right now. And a lot of people think that it's tough to get into to future trading right now and look at the markets, whatever the case is, even the stock markets. The reason why, because the markets have not solidly, I say in a sense, been moving in just one direction where people think that, I'm going to put on a trade and I'm just going to ride it to the sky, okay? No, this year alone, things have changed. And I'm going to talk about give you some tips, some things that you can actually kind of put in place that will allow you to succeed going forward, because proper risk management is one thing, especially here in 2022, that a lot of traders had to tighten up on in order for you to be successful. So we're going to talk about some ways to succeed as a new trader, someone that is starting out, moving from 2022 to 2023, what you can do in looking at the market right now, the behavior of the market, and how you become successful. So stay tuned, watch the intro, and we'll jump right into the video. Now, for most people, they're probably thinking that this year, 2022, has been a tough year. A lot of people probably have blown their accounts several times over, lost tons of money in comparison to the last 2 years. People think and get complacent thinking that the market is always going to move in one particular direction, and the sky's going to be the limit in a sense, whatever the case is, and they're going to keep riding and riding and riding. Next year could be totally different. I mean, we can look at the chart here, the daily chart, and we see the market has been pushing to the pushing to the downside gradually. When we're looking at the daily, though, this is over 1 year. So, and looking back at things, yes, but there has been lots of choppy areas. There's been lots of pullbacks, whatever the case is, where people have, been placed in bad situations and lost tons of money. Okay, so the key to really trading, especially into this year and looking back now, because we're rounding out 2022. Was really all about having proper risk management. And I think that traders, especially new traders starting out and moving forward, one of the smartest, probably one of the most important things that people need to really understand, traders do, and really get a grasp on is risk management. Knowing exactly where to get out of it and follow that whatever your plan is, whatever you want your stop is going to be, whatever the case is, get out. Okay, don't stay in the market and allow the market to push you in a measure of amount of drawdown to where you just can't climb back out of, okay? You have to tighten up on things. You really need to, because the markets are changing. I talk about this in so many videos. The markets are always evolving, and we as traders have to adapt, right? So, understand that. Risk management, to me, is one of the solid keys to protecting yourself as a trader. Risk management involves protecting your capital, okay? And you can only do that by continuously studying the market, because it's always going to shift, it's always going to evolve, it's always going to change, and we have to change just as well. So when you get into a trade, before you even get into a trade, know exactly where to get out of that trade, okay? And don't be someone that's always moving your stop. Okay, the market's going to come here. Okay, I'll give a little bit more breathing room. Go ahead and get out. Protect your capital so that you have plenty of funds or capital to be able to get into the next trade. Don't be someone that takes a lot of drawdown to where, boom, okay, where you once had a $10,000 account, now you're down to $1,000. Don't play that game. Get out of the trade when you need to, okay? All right, so protect your capital. All right, so let's talk about some things. First of all, I want to talk about what does it take to really be successful, especially in this current market climate, and moving forward. I don't know what 2023 is going to bring, but looking at how things have performed this year in 2022, even though I was very profitable, the key to it was all about risk management and protecting my funds, my capital, okay? And knowing where to get in and where to get out at before I even got to a trade. So I'm going to talk about some things that as a trader that we have to prepare ourselves for and better ourselves on so that we can just as well be able to trade the markets correctly in a smart way. So number one being in the right headspace, okay? And I talked about this before. Having a clear conscience, a clear mind, okay? Not clouded, going through a process of decluttering. If you're kind of like, moving from one strategy to another, whatever the case is, but hopefully you've already hashed all that out before you start going, trading live and so where you're not blowing through money, whatever the case is, blowing through capital and losing money in the market. So being in the right headspace, having a clear conscience, being able to understand what's going on in the market. I say this so many times before, the market is like reading a book. You have to understand what it's trying to accomplish, okay? All right? Kind of having some foresight to be able to understand how you should trade, all right? And that's the reason why looking at higher time frames and trading in confluence with the higher time frame is so important, okay? So being in the right headspace, okay? If you are someone that's been, you wake up and you're just dealing with some stuff, stay out of the market, okay? Because all those personal or emotional things you may be feeling, you may bring into your business environment, meaning you versus the charts versus the world versus tons or thousands of other traders out there, and those things that you're already dealing with, they may have some negative effect on you in your trading, your performance each and every day. All right, so that's number one. Be in the right headspace. Trust me. Okay, and number two, don't think that trading is all about just because you have X amount of money, having a good size amount of money that you're going to put in your brokerage account, I'm going to go for the full gusto. The sky's the limit. Don't do that, okay? Because the market has a way of correcting, has a way of checking traders, especially new traders. And I'm going to tell you, if you put $50,000 in that account and you do not know how to trade, or you don't have proper risk management or trade management, what's going to happen? You think that you're going to just put on a trade, I'll flip my $50,000 and make $100,000 and bring it to $100,000 today. It may happen. You may get lucky, but I'm gonna tell you, 9 times out of 10, someone that does not know how to trade correctly and is just right into trading, because they have the money, and to them money is they're not worrying about funding or capital or what's going to happen is you're going to start blowing through money real quick. Okay, so protect your capital. Like I said before, being able to protect your capital is one of the most important things to trading, all right? We want to be able to build an account, not blow through accounts, okay? So stop going for the full gusto, thinking that today's the day, I'm gonna drop 40 counts, put on 40 contracts, trade 40 contracts in the market, and I'm getting ready to, hit the mother load. If you think that's going to happen, more than likely you're going to blow that account in the same day, okay? So be smart, be wise about your money is what I'm trying to say. For the beginners or new traders out there, I'm going to tell you the best piece of advice I can give you is to take baby steps, regardless of how much money you have, to place in your brokerage account. If you've got $50,000 and you want to put in your account, whatever the case is, do not, especially starting out, I'm telling you, I'm suggesting this to you, build that account up slowly, okay? Even someone who doesn't have much money. I think it's more dangerous for a person who has lots of money starting off and knows little about trading to start trading, because they're going to succumb to the fact is they're probably going to take a major hit. Versus someone who has little money. It appears that people who don't have much to trade with, they build a little nest egg, whatever the case is, to be able to trade with, let's say $10,000. I'm not, maybe $15,000, $20,000, whatever it is that they're starting off with. And it could be lower than that. They are, I guess, more, say, emotionally tied. So they're going to go into more protective mode of protecting their capital. So which means they're going to start in small steps. And that's the best thing to do, is to aim for consistent small gains versus thinking you're going to jump out there because you have crazy amounts of money to put into your brokerage account and thinking that you're just gonna, like a rocket, go straight to the sky with it, or whatever the case is, and make a lot of money in one day's trading time because you already have money. The best piece of advice I can give you is to be consistent. And the way to be profitable is to be consistent. And by doing that, by taking, small steps, small gains to build up an account, okay? It doesn't take much when you have a lot to put into account to be able to, build upon, because, most people say that, oh, I have $50,000 to put in my account. I'm going to trade X amount of contracts, whatever the case is. Look, if you don't know how to trade and you're starting and you're learning, again, trade one lot. It may not be a lot to you, because if someone who's got, X amount of money to start off with, they quickly go into, I'm going to trade 10 contracts. I'm not telling you what to do. I'm just telling you what I recommend. Start small and make small gains and be consistent with you, and your account will grow. The same thing I'm saying to people who don't have, that may have put, one person may have $50,000 in the account, the other person may only have $5,000. The same steps, because you're all starting off at a beginner's pace, okay, from the beginning. And if you don't have much experience, the markets will destroy you. It really will. It will put fire to you like you've never felt before. Some heat to you that you will not be able to run away from, So trust me, start and have small gains, be consistent with it, and you will slowly build your account regardless of how much money you have to start off with. Be wise, okay? The next thing I want to talk about is quality over quantity. Again, lots of people who have X amount of money, when I say X, I mean a significant amount of money to start trading with, they quickly go into the mode of, it's all about quantity. I'm going to flip this $50,000 and make $100,000 today. I'm going to trade, large lot sizes, and I'm going to get, I'm going to show people that I can do it, and I'm going to make this amount of money today because I have the money to turn or flip and to double up on in the same day. Again, you may get lucky. I'm not saying that it may not happen, but is that being wise? Is that being smart? No, it's not. That's being foolish, especially when you are someone who does not know how to trade. You are inexperienced. You're learning. So take the approach of going through the learning curve, starting small, and building up. I'd rather make $100 a day or $200 a day, versus losing a few $1,000s a day because I was naughty. You're going to get slapped on your hand, and that slap is going to turn to a burn that you're not going to be able, like I said, that you're not going to be able to probably come back from. Because a lot of people who start off trading, who, that have significant amounts of money, whatever the case is, once they've blown through a significant amount of money, it leaves a bad taste, and that taste you never want to, you don't want to take another bite at it. Trust me. Okay, I've seen too many people and heard too many people who have blown large size accounts, and they don't even touch the markets again. It's hard to come back off of that when you have lost a significant amount of money. It puts a sickness in your stomach that will never go away. Okay, and it will emotionally bother you, not for a day, not for weeks. It could take several years for some people, depending on the person. Okay, so quality over quantity. The best thing to do is quality. Look for quality trade setups and capitalize by taking small profits or small gains, whatever the case is, and be consistent with it on the daily, okay, to build your account up. It's not all about, I'm going to take one trade and be done as a beginner trader and trade 10, 20, 30 lots or whatever the case is, or contracts or whatever it is, and thinking you're going to get rich or become extremely successful overnight. You may get lucky the first time around, but I promise you the market is going to burn you, especially if you're a new trader, all right? The next thing I want to talk, so again, quality is where it's at. Quality, looking for high probability trade setups, regardless of how much they may give you, but if they're high quality trade setups, get into them, take them, based upon, as long as, if it works with your strategy, then take the setup, whatever the case is, and build your account up little by little. Small gains, small profits will build a nice size account or a nest egg over time, okay? Now, once you have, let's say for instance, sustain a certain amount of profitability and consistency in the market over a period of time. I'm not talking about a month or two or whatever the case is. But, you know, I'm going to say this. Everybody's different. Everybody's learning curve is different. Some people may learn at a quicker pace. Some people may, as I said before, be put on the fast track because they have someone that is a professional or experienced trader that can show them the ropes, and they may pick up on it pretty quick. And they have the money to be able to trade, you know, a certain amount of contracts or lot sizes, leverage a certain amount of money into the market or whatever the case is. But once you have built up and shown yourself and proven to yourself, because you have there's no one else you need to prove anything to but yourself. Okay, always have that mind frame too. Don't ever let anybody kind of tell you, or you kind of feel like you can't, become a great trader, whatever the case is. The only person that you need to prove something to is yourself in life, regardless of what that is. Okay, so again, taking those steps, gradual steps to building your account over a slower period of time to prove to yourself that you can be a consistent trader. That's key. And once you've done so, then, once you've proven to yourself and you're consistent for a period of time, a lot of people always ask, well, what do you think? 3 months, 4 months, 5 months? Depends on a trader, guys. I get so many questions all the time. People are always asking hypothetical questions, and they're hard to answer because everybody is different. And it's all centered around just the person in general, the nature of people, because we stand in our way of our learning process when it comes to especially trading. Everybody has a different mindset, so it just depends on the person. I'm just leave it like that. But yes, gradually taking steps to be consistent, and once you've gotten there and you started building up an account, one, you're consistent, your strategy works, you build up a small account to a large account, or even a large account to an even larger account through the means of small gain profits, then you may want to start stepping up your lot size, your contract size. So then I'll say yes, that'll be the goal. Okay. Now moving on. Now let's say you're someone that's been doing extremely well. All of a second, then the market kind of throws you a monkey wrench. All right, and you start taking losses. Now I have a golden rule of thumb to where I believe that we as traders should be green every day, and I'm green daily. Do I have losing trade from time to time, or do I take, I don't ever really intentionally, not say intentionally, allow the market to stop me out, in cases, because I trade with a more mental stop than a hard stop, whatever the case is. But I know where to get in the market. Well, I know before I get into the market where to get out, where I need to take profit at, okay, and where I need to get out if it comes back against me. Over and over and over. When I get to a trade, the market does not move in my direction quick enough, I get out the trade. All right, and I may take a couple ticks loss. And I've placed and shown many videos, especially on my channel through the live, my live recorded sessions, where I said, oh, that's a bad trade. I should have got in. I got a little too late, a little too early, whatever the case is. I took some loss, because I got out the trade, but I wasn't going to take any more than that. That's proper risk management. I do not allow the market to come back to where I'm taking a drawdown. I don't believe in that. If the market, I simply follow this rule. If it does not move in my intended direction in which I'm looking to trade, okay, which the market to go, I quickly get out, okay? I'm going to take a little loss. I'll wait for the market to kind of show its hand, and then I'll get back in, all right? So as simple as that. By doing so and getting out sooner than later, it allows me, again, proper risk management, allows me to take a very minimal loss, okay? All right? Several ticks, whatever the case is, just to make it back up and plus more on the trade, okay? So I'll make it back up. All right, but if you're someone that's taking loss at the being consistent over a period of time, what I would say at that point there is to scale down then. Scale down from your contract size, your lot size, until you can kind of figure out what the market is trying to do. Again, like I said, the market is always evolving, so you have to be able to read and understand what the market intention is, which way is it trying to move. You have to understand about looking at market structure and following price action. So yes, that's another tip or advice, a point that I want to kind of put out there to someone that's a beginner trader. Maybe not just a beginner trader, someone that's kind of got a little bit more experience than just a beginner trader, or to even an experienced trader. If you're watching this, doesn't matter. But you already probably know this. If you're someone that's more of a professional, experienced level trader, you know, the market starts throwing you monkey wrenches and you start taking losses, I mean, one thing to do is to walk away. You know, someone recently asked me, well, how many losses do you think a trader should take before they, or you know, how many losses should a trader take or end up taking on before they actually, you know, call it a day? In my past, when I first started trading, which was over 10 years ago, I normally went by the golden rule of thumb of 2 trades. If you got 2 losing trades, get out the market. But you got to understand too, those 2 losing trades, again, bringing in the topic of risk management. Regardless of those losing trades, you should have had proper risk management. You should have known where to get out of it and stuck with it. So many people are always shifting their stop losses. You know, oh, the market's going to come here, I'm going to move my stock back. And by you doing that, you're taking on more and more drawdown. So be smart. Wherever you put your stop loss at, if you place a hard stop, make sure to get out then, and don't allow the market to take any more or eat at you anymore, take any more money from you. Okay. So again, I would say scale down. You know, from whatever size of lots you were trading, scale down, and you know, until you can kind of figure things out. Maybe go back to the drawing board. Make sure your strategy still works. You know, the way it should, accordingly to, you know, the market conditions, whatever the case is. The market's always changing. You know, some people have to adjust sometimes, and we do as traders. You know, we have to adjust with the market too. But that's all I want to talk about today. I just wanted to kind of put out some pointers, some tips that would maybe put a lot of new traders, beginner traders, in gear to drive towards success. You know, maybe kind of elevate them to making them feel more comfortable about wanting to step into future trading. So here it is. I hope the tips and I helped out and give you some confidence, give you a little bit of boost to make you want, or allow you to want to start now tackling the markets. Yeah, we're in a different market situation than we were 2 years ago, whatever the case is. But I think this is an opportune time for a lot of people to start trading, newbies especially, or new traders, because of the conditions we are. You know, you can really see how maybe tough of a market it was this year, and understand that proper risk management is everything. If you can understand and grasp that, and really put emphasis on your risk management, and understand that piece there, risk management should be like one of the most important things on the top list on your trading plan, because without it, you will fail. All right. But that's all I have for you today. Hopefully you guys found some value in the content in this video here. I appreciate everyone who's tuned in. If you are interested in joining our Discord community, please find the link down in the description portion of the video below. I will show you that our community right quick before I jump off. Right here, I have kind of slowed down my own personal trading right now. Take a few trades a day, whatever the case is, because we're moving into the holiday season. So again, this is our Discord. We have 2 channels set up, which is the trading floor and the general chat. The general chat channel is for future traders who are interested in engaging with other future traders to ask general questions about futures. Maybe you're a new trader and you want to kind of get some insight about the future trading markets, or any information pertaining or surrounding future trading. You can go to the general chat section, share information. The trading floor is for traders to basically share their trade entries, their levels, their zones. So we basically are engaging each and every day with one another as the session is open, talking about the market specifically, and you know what's going on within the market, and sharing, you know, like I said, levels and zones and our trade entries. I take screenshots, I put on the trades I make, as well as I throw out levels of interest that are zones that I'm looking at. I trade supply and demand, so you know, that's my style of trading, but I have a strategy that I use around trading supply and demand. So anyways, that's all I have for you guys today. If you're interested in joining the Discord, find the link down in the description portion of the video. And I'm going to sign off and see you guys in the next video. Take care, and if you're trading, please be safe in the markets.